Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call, starting a new week, an important one. Lots of news as we sort of come into this Monday morning and lots more to track over the next few trading sessions. This is Bazaar. We are coming to you from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, good morning.
Hi, good morning, Prashant, and welcome back. Morning to you, Nigel, as well. So finally, the original trio is back here. And I think we wanted to ease Prashant into it, right? That's why we got him to give us a bit of a guest appearance on Friday, thanks to the Jane Street saga as well.
It was Friday, huh? Seems like so long back.
But yeah, interesting times.
Has begun, so welcome back.
Actually, you know, it's proven management strategy. You should always come back on a Friday. Kind of, you break in.
Ease into the reality.
Saturday and Sunday, and then you come back on Monday. So,
well, interesting times for the markets, and welcome back, Prashant. But I'm still high after last night's victory, right? India conquering England. The boys in white, young side, coming out trumps. Wow. I mean, amazing. That too, we did it without Bumrah. So kudos to the boys. Quite pumped on that front, but we've got the trading cues to get to.
Absolutely. And I think we'll see if we see some fours or sixers this week, right? In terms of the markets as well. At least in terms of headlines. Markets, I'm not very sure. But in terms of headlines, will we really see some action. Now, let me just take it from the top in terms of what you need to know. So all eyes, of course, on the Trump tariff deadline, which is on the 9th of July. So when I say 9th of July, it's basically the evening of the 8th into the morning of 9th. That's essentially what you're looking at. So that's the deadline, the tariff deadline. This is the reciprocal tariffs which were first imposed. Then there was a 90-day extension which was given. Then, I mean, for many it moved to 10%. By the way, there have only been two deals struck so far. One is the UK, the other is Vietnam. Will that be the template? We'll see. But sources tell CNBC TV 18 that with regards to India, the final decision on India-US mini-trade deal is in the next 24 to 48 hours. I mean, actually, you only have that much time. If you're to believe that this is a sacrosanct, the 9th of July is kind of a sacrosanct kind of a deadline, which I don't think it is. But before that, Treasury Secretary Besant over the weekend has said that tariffs start August 1st for countries that haven't finalized an agreement with the US. So in a way, are they already kind of starting to push the deadline out a little bit? Because, and he was, I think Besant was asked this specifically, he said, well, it's not an extension, but in a way it is, right? I mean, and I think that's very, very logical that the Trump administration will be pragmatic about it. And we said this earlier as well, many weeks ago, that with countries that they think they're hopeful of getting to a deal, a good deal for the US, I mean, they're not going to be hamstrung by the self-imposed deadline of the 9th of July. While the deadline is important, I think there is enough leeway for deals to be struck before, but more importantly, after the 9th of July as well. So that is essentially the point. Markets anyway assume the 9th of July deadline is largely symbolic, and we've not seen any jitters at all as far as the markets are concerned, based on the tariff negotiations, etc. So that's the tariff bit, which we'll sort of come back with discussions, etc. a little later. Now, two key events last week in the US, out of the US, passage of Trump's spending bill that went through, and of course the US-Vietnam deal as well, which was agreed upon. Is Vietnam really a template for other deals? I don't think so, because there is the issue of transshipment, etc., which is not relevant for many other countries. It's only kind of relevant for the ASEAN economies, Philippines, Thailand, Vietnam, etc., not for the rest of the world in that sense. Now, the S&P 500, hit a new all-time high of 6279. This was on the 3rd of July. Remember, the 3rd of July was a shortened trading session in the US. That was Thursday. And, of course, both equity and bond markets were shut. But, no stopping the S&P, which continues to rally hard and higher. Oil prices are slightly lower this morning. Over the weekend, OPEC has increased production by more than what was expected. So that is something to take note of. The oil prices down about 1% or so. First quarter earnings season here in India is going to be in focus as well. Expectations, mind you, are modest. I mean, you take any sector, banks, for example, which is 30% of the weight. NIMs are expected to decline over Q1 and Q2 anything between 10 and 30 basis points. So generally, it's not going to, expectations aren't for any a big banger of an earnings season at all, actually quite modest. SEBI's Jane Street order, and we'll continue to talk about this in terms of there are so many angles to this, but from a pure market standpoint, will the impact show up with regards to quieter markets, quieter volumes? I mean, you've had wild moves up and down without reason, and suddenly the screen would be on fire. Will all of that sort of start to quieten down quite a bit? And, the impact of Jane Street perhaps is the signaling impact could show up at other HFT firms, etc. as well. Jump, Citadel. There are Indian firms like Graviton, etc., etc. So, that entire segment, which has been driving market volumes in a big way, I think will be in focus. Remember, BSE was down sharply on Friday, and of course, Novama was the other one, which lost quite a bit as well. More on that a little later. So just to tie in the levels here now, I think it's going to be a little quietish as far as markets are concerned. So I don't expect any big moves, big fireworks in that sense. Support for the Nifty 25,165, which is the 20-day moving average, and the resistance, which is last week's high, which is 25,650. The Bank Nifty support is Friday's low, 56,623, and then last week's high for the Nifty Bank was 57,628. So these are very, very near-term levels, which we are working with. GIFT Nifty will give you a quick sense of how we are likely to start this morning. 23 points lower as far as the indication is concerned. Surabhi.
Yes, absolutely, because most of the Asian markets are more red than green, and that's because of this whole trade uncertainty weighing on markets' minds. Now, what did Mr. Trump last say? Last, he said that he signed several letters, and he said that at least 12 at last count. And he said they will start going out on Monday. Now, who gets what tariff, what rate? That's pretty much what's bothering markets right now. In fact, if we look at Wall Street futures, because of this whole new tariff specter, even Wall Street futures are lower. Between about 0.25% to as much as 0.5%, depending on which market you are looking at. Now, on the India-US trade deal, like our colleague Parikshit has been reporting, the team came back from the US without any conclusive agreement. So there were no big headlines. But what he's picking up through the back channels is that this mini deal could happen maybe over today or tomorrow, and that's the hope. Now, this is going to be a mini deal. The real work on the bilateral trade agreement will only happen after the 9th. But there have been sticky issues, and we know that. India's position on agriculture and dairy has been very, very firm. And not just this, let's remember the other weekend development, that India has now moved the WTO against the US on tariffs that are coming in on automobiles as well as auto components. And this is in response to the 25% ad valorem duties that the US had levied. India has basically gone to the WTO and said that these are not compliant with the GATT agreement of 1994, which is a general agreement on tariff and trade. So all is not well in paradise, but they're trying to get through the differences and get at least the mini trade agreement going. So that's the single most important point to watch. Coming to the market, it was consolidation, but consolidation with a negative bias. The Nifty ended up losing about a little over 0.5% last week, but we didn't break the lower side of the trading range. So that's the good news. The FPI flows have been patchy through the week, and we saw more of that on Friday as well. A small sell number, not very big actually, but 760 crores of selling. But even domestic institutions, at least on Friday, were on the sell side, sold off cash market stocks worth about 1,000 crores. There are lots of updates in focus, and I've just picked out 2 or 3 which the market will have its eye on. IndusInd Bank, we know it's going through its issues. But how deeply has it started impacting the business? And I think that's something the market will focus on, irrespective of the kind of notes that are out there. Because the advances are down about 4% year on year, 3% quarter on quarter. More importantly, the worrying point is the fall in deposits. The bank's CASA ratio has come down from 36.5% last year to just about 31.5%. So this needs to be tracked very, very carefully. A lot of FMCG updates have come, some good, some bad. Dabur, they're saying the consolidated revenue will be in low single digits because the beverage portfolio continues to hurt Dabur. There's some overall positive statements they've made as well, but that's the big headline to focus on, that the beverage portfolio is still hurting Dabur. Godrej is actually pretty okay. Godrej is saying standalone business could be delivering mid-single-digit volume growth and double-digit revenue growth at a consolidated level. So that's sounding better. Jubilant Foodworks update is actually pretty good. 17% revenue growth, like-for-like Domino's growth of over 11%. So mixed bag out there, but yes, Dabur and Indocent to watch out for specifically. Nigel, what else are you tracking?
Well, on the domestic front, we'll be keeping an eye out because the earnings season does kick off. So that's going to be important. On the global front, the FOMC minutes, that's the other one that I'm going to be looking at because that will have its own repercussions with regard to flows and the fundamentals of the US market as well. And besides that, the progress on the tariffs, that's going to be the other important point. So those are the top cues on the global front that I'll be looking forward to in this week. What about Friday's trade? Well, FI participation in the cash market itself was 40% lower. Remember, the US markets were shut because of Independence Day out there. And on the back of that, you had participation that was much lower in Friday's trade. What did the FIs do in the F&O market, though? And before that, we saw a bit of a recovery from the lows of the day, both on the Nifty as well as in the Nifty Bank. And it appears for the markets on the whole, there was a bit of a short covering bounce that did take place. What did the FIs do in the F&O market? Well, they added some mild short positions, close to 5,000 short contracts on index futures. On stock futures, they added more shorts than long. So there were some shorts that were getting added into the system. But it appears even the FIs are not expecting a big fall from here on because they wrote more puts than calls in Friday's trading session, telling you that there could be some kind of a base, in the near term on the markets, and we wouldn't be looking at too deep a correction. So that's what the FIs did in the F&O markets. Moving to positioning, in the past week, the FIs, they went ahead and they added short positions. So from the start of the series, actually, the FI short positions have doubled. Just take a look at that. And even if you look at the clients, they're doing a thing of their own. Their long positions have doubled. At the start of the series, we were saying this market is missing out on some shorts, in the system. Now, that's gradually coming back. So the FI short positions at around 66,000 contracts. And in terms of percentage, well, it's more than 70% of their positions are on the short side. Moving to the options data, the 25,400 call, that had a fair bit of open interest. And you had the 25,200 put as well. There was a mix of activity with the premium at around 50 rupees or thereabouts. So which brings us to the levels. Friday's low needs to get protected. And that's going to be the important mark. You don't want that to get breached on the downside. So that 25,331 level, that's going to be important. And the bulls will want to guard that on the downside. So that's going to be an important mark. On the upside, the resistance comes in, if you take this level of around 25,400 call and you add around 175 rupees, that 25,575 is going to be the important mark in terms of a resistance level that you're looking at. Well, OPEC Plus, they went ahead and they, declared their verdict with regard to what they are planning on with regard to crude. And the amount of crude that they will be releasing in the system is going to be around 570,000. The sheet was bracing for a number of around 410,000. So the effective release of crude in the market is going to be nearly 30% higher than what was estimated. It'll keep a lid on Brent crude prices, and I'll keep an eye out on OMCs from here on. There is valuation comfort. State elections are a distance away, and crude oil prices remaining subdued is a tailwind for them. So these stocks continue to remain on my radar.
Okay, all right. So plenty of stocks to watch and, of course, the overall headlines on the tariff front as well. So let's get started. We have the equity call of the morning coming in. This one is from Chetan Sheth of Nomura, who expects markets to remain volatile into the July 9 deadline when the 90-day pause on President Trump's reciprocal tariffs expires for non-China trading partners. He says while uncertainty remains high with multiple possible scenarios, he believes that greater clarity on trade tariffs might actually help markets eventually grind higher. In general, as this could reduce one aspect of uncertainty, allowing investors to focus for now on other positive developments like the passage of the US budget, Fed rate cut theme, benign US long and bond yields, resilient US economy, and the ongoing AI narrative.